Hello, welcome to Money Gist. I am Oluyemisi Dada. Here are the top stories for you today. Nigeria is seeing a major boost from its diaspora community. According to the Central Bank Governor Oluyemisi, money sent home by Nigerians abroad has jumped massively in just 2 months. We're talking about a rise from around $200 million a month to $600 million. And if this momentum holds, inflows could hit at least $1 billion every month by next year. Now, what's behind the sharp rise? Cardoso explains that the exchange rate has become more competitive and remittance channels have improved. That means Nigerians abroad no longer need to rely on alternative or unofficial routes to send money back home. The big picture here is that these inflows are not just increasing Nigeria's dollar supply, they're also helping to diversify the country's foreign exchange portfolio and reducing overdependence on oil revenue. So in essence, the Nigerian diaspora is quietly becoming one of the most important drivers of stability for the economy. The Corporate Affairs Commission (CAC) has once again shifted the start date for its revised service fees, this time from September 1st to October 1st, 2025. If this feels like deja vu, you're right. The new fees were first supposed to kick in on August 15th, then moved to September and now pushed forward again. Why? According to CAC, the delay is all about making sure its upgraded company registration portal is fully stable before rolling out the charges. Many Nigerians have complained of glitches and delays while trying to register new companies or file documents, so the Commission says it's taking extra time till mid-September to fix the issues. In a public notice, CAC explained that the decision is about ensuring a smooth and efficient transition. The idea is to give businesses, investors, and the public a seamless experience once the new system is fully optimized. Now, let's not forget why the fees are changing in the first place. Back in June, CAC announced a modest review of service charges, saying it needed to 1. Improve service delivery, keep up with today's economic realities, and sustain its ongoing digital transformation. The Commission insists the new rates will still be competitive by global standards, while also covering rising operational costs and boosting investor confidence in Nigeria's corporate registry. Nigeria's digital economy is about to get a big push, and it could change the way we live, work, and interact with the government. Here's the gist. The federal government says that with the new National Digital and E-Governance Bill, Nigeria's GDP could see digital contributions rise to 21% by 2030. Right now, the sector already adds between 16 and 18%. And in the first quarter of this year alone, it brought in over 7 trillion naira. That's 14% of total GDP. So what's this bill all about? According to the Minister of Communications, Bosun Tijani, it's designed to lock Nigeria's digital transformation agenda into law. That means creating a strong framework for better e-governance and service delivery, stronger digital identity and data protection to secure online transactions and digital trade. In plain terms, it will move government systems from paper files to electronic platforms, make agencies work together digitally, and build public trust in digital services. Another key point is this bill wasn't cooked up in isolation. It went through extensive consultations across all 36 states, bringing in voices from government, tech innovators, private sector players, and civil society. The goal is clear: a resilient, inclusive, and future-proof digital economy that creates opportunities for citizens and businesses while boosting Nigeria's competitiveness on the global stage. Cocoa prices have just slipped for a second straight session after hitting 2-month highs earlier in August. In New York, December futures fell 1.3% to about $7,600 a ton, while London prices also dipped 1%. What's behind the pullback? Demand. Shoppers are cutting back on chocolates as prices rise, and it's showing up across the industry. Lindt has lowered its profit forecast, while Barry Callebaut, the world's biggest bulk chocolate maker, has reported its steepest sales drop in over a decade. But don't expect cocoa prices to stumble too far. Supplies are tight. U.S. port inventories are at 3-month low, and West Africa, which grows most of the world's cocoa, is struggling with extreme weather and crop disease. Côte d'Ivoire just recorded its driest 30-day stretch in 46 years, raising risks for the main harvest this October. Nigeria's outlook is also weaker, with output forecast to drop more than 10% next season. So for farmers, chocolate makers and consumers alike, the picture is clear. High cost, fragile demand and weather shocks are keeping the cocoa market on edge. The Nigerian stock market opened the week on a soft note. Key players like Oando, WAPCO, UBA, Zenith Bank and First Holdco all shared value, dragging the all-share index down by 0.41% to settle at 139,722 points. That move also trimmed the year-to-date return to 35.75%, with market capitalization slipping by about 362 billion naira to 88.41 trillion naira. Trading activity was mixed. While the number of shares exchanged fell slightly, down 6% to 408 million units, the value of transactions actually surged over 42% to nearly 15 billion naira. FCMB led in trade volume, while Aradel topped the value chart. Overall market breadth leaned negative, with 33 losers against just 15 gainers. Banking, industrial goods and oil and gas indices all dipped on profit-taking in Zenith, WAPCO and Oando. Insurance and consumer goods also come under selling pressure, led by Veritas Cap and Honeywell Flour. Looking ahead, analysts expect cautious trading as investors reposition ahead of earnings releases and dividend declarations from top-tier companies. In the money market, activity stayed relatively calm. Yields on Nigerian Treasury bills slipped by 3 basis points to 19.10%, while overnight lending rates eased to 26.88%. For investors, this signals a slight relief in short-term funding costs. Over in the bond market, yields closed flat at 16.94%, suggesting that traders are holding positions steady, likely waiting for fresh guidance from upcoming auctions or macroeconomic data. And on the currency side, the Naira gained a little ground at the official forex window, appreciating by 0.25% to close at 1,531 Naira 57 kobo to the US dollar. That's modest, but it offers some stability for importers and portfolio investors keeping an eye on exchange rate risks. Overall, it's a cautious but steady session, with money market players enjoying slightly lower rates, bond investors on pause, and the Naira showing a bit of resilience. And that's a wrap for now. See you in the next video. I am Oluyemisi. Dada.